Hi everyone, a very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi, and the topic that we're going to talk about today is something that's very relevant. It's something that we have been noticing as an increasing trend, and that's with respect to day trading or share trading. We understand that there is, of course, this combination of the lockdown which has prevented social outings. It has prevented you going to office, boredom at home, nothing much to do. And then, of course, you see the massive rally in equity markets. Lots of traders making a good amount of money in some individual stocks like, let's say, Reliance Industries or, a Cipla, so on and so forth, which have seen a powerful rally in the last 3-4 months. And that may have perhaps caused a little bit of FOMO to creep up onto you, wondering why can't you as well cash in on this rally, use the plethora of the zero brokerage or low brokerage apps that are out there, and try and make yourself a quick buck as well. Well, let's talk about this entire phenomenon. Let's talk about then some insights, some tips, as cliched as it sounds, in this entire process of share trading, and mind you, some pitfalls, some risks, some downfalls as well when it comes to intraday share trading. To talk about this, we have one of the most experienced traders of Dalal Street, the most successful, Bala of cashthechaos.com. Jay, thank you so much for joining us today on The Money Show. It's a real pleasure having you with us. I hope you, your family and your team members are doing well and safe. So Jay, this is a very rare phenomena we are witnessing, where people are literally bored at home. They don't know what to do. Many of them have been indulging in trading activity that's really the fingerprints of retail trading is all over, not just in global markets, at our home markets as well. A massive rally as well is being witnessed in the equity market. So I cannot start off the conversation by not asking you about this massive rally first, and then we can go on to discussing a bit more on the share trader or the day trader side. So tell me, what's really leading this rally? I mean, in March, everything was gloom and doom. We had tanked, the market had touched lower circuit several times, and then from there, there's been a 30 to 40% rally.
Thanks for having me on the show, Mubina. See, my take on the markets will be slightly different from many people. I'm always of the opinion that it's always the social mood of the people that drives the markets up and down. Markets always swing between moods of extreme optimism and extreme pessimism, and we always are in this cycle swinging between extreme optimism and extreme pessimism. So we had that swing from the beginning of the year to the March lows of extreme optimism, and once that is done, each of these moves are likely to have the rebound in the form of the opposite direction. So we are having one of that, but the jury is still out there whether or not this is a turnaround for the good, or if it's still an echo from the past. So that is still there, and as a trader, you don't have to be conscious of what is it, but we are focused on how to capitalize on it in the short to medium term. That's what a trader focuses on. And coming to this topic we are on, actually 20 years ago, I was what most people were doing during the .com and Enron crisis. I was actually a full-time employee of an IT company, a major IT company in India. And when we were in bench due to 9/11 and the Enron and .com bust, I was actually doing the same thing, and that's what got me into the market. And I was, although a slightly passive investor, when I was on bench, the markets got me in, and so I guess I would be able to take these questions from a person who's been on that side and come to this side.
Well, yeah, true. Then, Jay, you are really the best person to then quiz about your beginning journey, about the mistakes you made, and the mistakes that many of these first-time traders as well will make. So, Jay, it's very important to understand the psyche as well of traders. Like you mentioned, it's about the social behavior as well, right? Behavioral investments, if you could call it that. It's a whole category, for a lot of financial advisors that they dwell on. At the beginning, when you just started off, in the world of trading, I'm sure you were a very different person then, you're a very different person now. What were some characteristics, that you had back then, which you believe you've grown out of, or which you believe, you have to retain to be able to be a successful trader?
One of the most important thing is that the trader I was then, I was actually quite emotional about the market moves. Today I'm very much balanced, and I'm not affected by day-to-day swings, or in fact a few days up and down swings. Even if the markets were to go against me, I'm not bothered. That was not the person I was when I started into this journey. That's a very important thing. You're asking about psyche. Psyche of a trader is a very, very important thing. Having a good psyche is almost, I would say, the key to be a successful trader or an investor. The amount of time you distance yourself from the market, that actually helps. And the more time you watching closer to the screen, that's actually making you go in your mind, buy, sell, or hold, buy, sell, or hold. You don't want to do that. Basically, you have to be balanced and have a plan and stick to the plan. That is possible only if you have a good psyche. It's very important to have not just social distancing in life. You need to have a distance from the markets too. Basically, you need to have something for the mind. Take your mind away from the markets. Have a very good hobby, ideally a sport or some physical activity. And that way, when you take your mind off and have a very interesting hobby, you come back to the markets in the zone. That's the way to go about in the market. And as an initial trader, everybody has something known as the beginner's luck. A wise man said, the financial markets is a place where people with experience meet people with money, and the people who have experience take the money, and the people who have money take the experience. So that's how the beginner's luck starts. When you are starting out, the market somehow gives you that successful trade, and you think you have figured it out all, and that's when the trap begins actually.
So largely, I think, Jay, you've pointed out two mistakes maybe that investors, or rather traders, could make. One is being very emotional, being glued to the screen as well constantly with that thing of buy, sell, hold. And the second one is overconfidence, especially if your first trade has been a successful one. Do you think these two are the biggest mistakes that first-time traders could make?
That's right, and there actually, there is one of the, I would say, in the markets, mistakes have 1,001 cousins. Even professional traders like us, we do it, but the difference is that we have risk control in place, and when we recognize that mistake, we recognize it quickly and quickly make corrective steps. So one of the most important thing I would say a rookie trader does is actually misallocate funds. Basically, let's give you an instance. Let's look at something like a Dr. Reddy, which trades at a very high price, and compare that with something like, let's say, for example, a sale or an idea. It trades at a very low price, but they don't focus on the amount of money allocated to each trade. That has to be quite uniform. So, when you see a small price stock, you don't put in all your money. You don't put in all your eggs in one basket. That's sure way to disaster. And that's one of the mistakes you do and come out on the other side. So basically, risk control is the holy grail of trading, which rookie investors don't even know. In fact, many experienced traders don't focus on risk. When they say, I've made, I'm selling options and I'm making money out of it, nobody asks the question, how much risk are you taking for getting that, generation of that income? So first thing people should focus on is focus on risk. Ask what is the amount of money you're risking that you will lose if you go wrong. There's no surety in the market, and everybody has to fail at some point or the other and learn from the failure. But if you are unprepared for that failure, that's a sure way to ruin, and you don't want to be in that situation. So take measured, calculated risk that won't hurt. Always that is the holy grail. You can be having any method, but if you have a very strong risk control and low risk methodology, you're sure to be a winner. Because if you're defending your money, what else can happen? You're bound to make more money.
You know, when you say risk, it also brings you to the point of suitability. Trading is obviously an activity that would tend to have a bit more higher risk than, let's say, long-term investing or investing in mutual funds. The people that we are seeing come into trade now, these are mostly first-time investors. Forget about traders, first-time investors. They're looking at, you know, the screens, and they're looking at the way people are making money, and they think, you know what, let me as well try and make a quick buck, right, in the share markets, because it's also so simple because of all these apps and these DIY broking houses that essentially let you trade for zero brokerage charges as well, some of them. So I want to talk to you about suitability first, and then we can talk about the other bit. Like I said, they have their steady jobs, they have their steady day jobs. This is almost like an intermittent thing to do before their regular jobs start off. Right now, the regular job may be shut because of the lockdown. So who do you think trading would be suitable for? Let's say if an individual has his own house bills to pay, they have their own rent to pay, they have a lot of other responsibilities. Should they really then use the trading platform? Should they really be indulging in share trading?
Very, very good question, Mubina. So basically, I'll say there are many types of people for whom trading is suitable. One instance is somebody who's been in sales. That's one instance. The reason why I say that is because as somebody who's in sales, he goes and does cold calls. When he does cold calls, he knows that, you know, he's actually taking a small risk. But if the probability of that becoming a success is actually one out of 10 times. He's okay with the 9 times taking a hit, and he spends very little effort and money into it. But the 10th time he recognizes this is a good prospect and that's going to become a convert. That's the kind of psychology you need to have when it comes to trader. And what I've observed is people who are good in music, they have an inherent understanding of the market rhythm. So it's not a one-to-one correlation, but people who are good in trading also tend to be good in music. It's not, but the reverse is not true. All those who are good in music need not be good in trading. So, there are many factors like this. But a trader is someone who doesn't mind taking small losses and who doesn't mind, waiting for the right chance to come through. Patience. A patient trader is the most successful trader. And, you must be willing to let go of a trade that doesn't match your risk profile. So that kind of a person is the one who's willing to be successful in the market, because he knows for being successful in the market, he's taking small amount of risks. So that's the kind of psyche needed. And I just gave 2 examples of the kind of people who are there. And very important question. Now, trading is not suited for everybody. If I come on TV and say, this particular stock has this much potential, nobody is asking the question, what is the hit I'm going to take if I am wrong? Everybody is wrong at some point of the time. So, that they just look at, okay, wow, that's the kind of figure I'm going to make if I make money. They don't focus on how much money they would lose when that particular, call goes wrong. And it also requires a lot of, effort and homework before you come to the market. You have to be meticulous about it. You need to have a plan. Those who come to the market with a plan, well-defined plan, let's say, I'm going to do this, and this. And based on this, if the market does this, then I'm into the market. Otherwise, I'm out of the market. So you need to have a well-defined plan. People who can plan and strategize and stick to plans, they are the kind of people who will be successful in the markets.
Some people may not have that psyche of being a day trader, and you need to recognize that patience is an extremely important virtue that traders should carry with them when they do want to indulge in day trading. And I hope as Jess speaks of all of this, every one of you who may be watching this show right now is introspecting and genuinely thinking if they have these traits with them to actually be a successful day trader. The idea is not to absolutely put all of you off day trading, but the idea is to ensure you are aware of A, the traits that you need to be a successful day trader, and B, of course, the downfall as well that could happen, which I will as well come to in just a bit. The other part then, of course, Jay, is broking apps. Today, all of these apps have made it so very simple, right, to just go on, punch in a trade, and with very, very low broking fees or almost zero broking fees, right? Do you think all of this is something that also spurs this risk-taking appetite for a lot of individuals, even though they may not be having this risk-taking appetite?
Yeah, it does encourage a little bit of risk that you may not be able to afford. So it adds to the factor, but I wouldn't fault them, because they're actually trying to spell out their fear. We are in a pandemic situation, so it's actually that fear of protecting their wealth that actually pushing them into the markets. And this zero broking is actually just an enabler of that. They would anyway still do it even if there was brokerage, because they're actually trying to defend their wealth. So this is actually adding a little bit of fillip to what they would actually do, and probably bring one or two section of the people who may not otherwise take, but predominantly they would anyway do this, because this kind of environment is pretty once in a lifetime environment, and everybody is trying to defend their wealth and plan for the future. And I wouldn't fault zero brokerage being entirely and I'm not saying you are faulting it, but I won't say that's the driving force. They would anyway do it even otherwise.
Yeah, but I think what these apps have done is just given it literally to you on your fingertips. And I think that's all the more why we've seen this increase in trading and increase in demat account. But yeah, again, you need to be completely cognizant of your risk-taking abilities. Okay, just the last couple of questions then, Jay. To wrap up everything that you've mentioned, like you mentioned, everybody thinks of the upside. Everybody wants to look at that more optimistic view, right? And especially with all the tips that you hear from your friends, all that noise and information around you, and more importantly, like I mentioned, tips, right? That, oh, okay, this one has this target and this is the kind of potential money it can make you, etc., etc. But sometimes what people sort of, ignore or do not read into completely is what will they lose. So if you will just bring those realities into light for all of our viewers who have indulged in day trading during this lockdown, to either pass time or to think that it will make them rich. If you could just bust the myths around day trading, if you could bring to light the realities and the risk of that one wrong trade if it does happen, if they do indulge in it.
Basically, if day trading was that simple, and everybody would be doing it. In fact, stock market investment and trading, that was simple. Everybody will be having this as a day job or and a full-time job and be doing. In fact, day trading is the most toughest profession to generate regular income. You might be able to have a few hits, but that's not and that does not make a trend. Imagine in trading is the only business you can have a negative income. You cannot, in other day jobs, and at the very worst, you'll get fired and you'll have zero income. Trading is the only profession where you can have negative income for the month, for a few months, and even for the year. So that has to be that risk has to be taken into account. And it takes a lot of effort. In fact, if you don't have a good psyche, a small irritation can disturb your mental balance, and you can pull the trigger at the wrong time. You don't want to be doing that. So day trading is very, very tough, and you need to be extremely disciplined. And it is often said that if you're going to be in trading, all you have to do is if you go increase the time frame of your actual view, and if you reduce the risk that you take, about 90% of the problems get solved. So that's the most important thing you need to bear in mind when it comes to day trading. So do your homework. In fact, as a day trader has an extra effort to put in, and it's not. I'm telling you from 20 plus years of experience. I started out as a day trader. I've busted my account twice, and it's not easy. And luckily for me, I had the sense to take small risk, and I had the sense to not bring in. I had the sense to separate my risk capital from my other capital. That's the separation one needs to make.
Okay, well, very valuable advice, Jay, and I think you were the best person really to share this, since you were as well once upon a time a regular individual salaried, not exactly in the share market, and then yes, you switched over to the other side. So I think you really managed to give us the ground realities of what it's really like to be a day trader. And again, like I mentioned, the idea is not to discourage anybody from indulging in day trading, but just so that they are aware of what kind of risks this carries, and if they can genuinely introspect, and if they have the kind of traits, the kind that Jay and Bala mentioned, you must have to be able to be a successful trader. Patience, one of them among many of them. Well, Jay, it was a pleasure having you with us. Thanks so much for joining us today on The Money Show. Well, we're out of time, so we will wrap it up on the show. Stay tuned though to ET Now. We have lots more lined up, including TCS's Q1 numbers.